just coming across. EPS is a slight miss, Sam. It missed by a cent, $1.95. Estimates were calling for $1.96. As far as their net sales, $213.39 billion. That is a beat. $211.49 billion was the expectation. Here comes that Amazon Web Services sales number. Very important. Charlie O'Shea highlighted to us that Amazon number is at $35.58 billion for their Amazon Web Services. That is better than the $34.88 expected. Operating margins right in line with expectations, 11.7%. Also want to take a look at operating income here. Overall for the fourth quarter, $24.98 billion. Expectations were for $24.82, so that is also a best. We are looking at physical stores net sales, $5.86 billion. That came in line with expectation. Specifically in North America, net sales $127.08 billion. That is a slight miss below the $127.21 billion expected. Also starting to get some guidance here. First quarter net sales expected to be $173.5 to $178.5 billion. The expectation was for $175.54, so that is falling at the high end of that range. Operating income for the first quarter expected to be between $16.5 to $21.5 billion. Estimates were calling for more, for $22.24 billion. Now that is a miss there as well, outside of the range. We are seeing a move 5% to the downside here. Sam, want to bring you back into the conversation. Also want to bring Kevin Green back into the conversation as we are just getting the capex number right now, this very important number. 2026 capex expected to be $200 billion. Estimates calling for 146.11. Again, I did not stutter and don't think I'm reading that wrong. $200 billion. So just when we thought that Alphabet couldn't go any higher and theirs was astronomical, Amazon came out and said, well, let us show you. Although it is moving lower now, we are down 8% just since that number came down across the wire, dropped about 3% more on that. KG, want to get your thoughts here as we saw another downward move with this massive capex number.
Yeah, a little bit different from when you're looking at Alphabet. I mean, Alphabet did miss on the YouTube revenue numbers, but the other business units actually held up pretty well. If you're looking at Amazon, they're actually missing at a couple of different areas within their business. When you're looking at North American sales, that was a miss. Obviously, the guidance moving forward is a little bit of a miss as well. The capex being that aggressive to the upside, once again, kind of exceeding the street's expectations. This isn't that great of a report at all. We're starting to see a trend here. Actually, if you kind of go back and you look, every single one of these Mag 7 names outside of Meta has actually had a pretty decent reaction after their earnings announcements. And I think that's going to, once again, kind of drag the market down. But this is actually, once again, not a great report, especially if you're not able to hit the metrics, at least for the business, and you're ramping up capex spend. The question starts to become, what's going to happen with margins here in the near term? And how are you going to be able to try to turn this around with some of this expense management? It just doesn't seem like it's a good look. And we are, once again, kind of trading towards that $200 level for Amazon, and see if we have some buyers to step in at this level.
And we're looking at some charges they're disclosing as well for the quarter. They had income included charges of $1.1 billion. Their operating income included a $610 million in asset impairment. So it did look like they took some charges in the quarter. Sam, as far as what we talked to Charlie about and some of the metrics that he highlighted as being of the utmost importance here, what is sticking out to you as we're now moving 10% lower? The expected move for Amazon, by the way, from the options market was about 5%. Plus or minus.
Yeah, I was also seeing that perhaps the market was looking for an even 7% move today as well. So, there were some varying expectations out there. But, I mean, there are just so many things going on with this business. I mean, obviously going into this, everyone was wanting to know what that capex number was going to be. And it was almost like when you read 200 billion, it was like, hold my beer, Google, because it was more than what they had seen, because market is looking for very much growth in that spend, thanks to what we've heard from the Alphabets, thanks to what we've heard from the Metas and the Microsoft. And the big question is, how aggressive, as I said to Charlie, does it need to be versus the justification here for what they're actually saying with respect to the ROI. Now, everybody was expecting to see this big jump, particularly because they had been talking about 125 billion in 2025, expecting more in 2026. So that was always going to be higher. But I think the AWS is an important metric as well, because that 34.9 billion billion that was expected. We saw that 24% increase, which was higher than the market was anticipating. It was that 33 billion that we saw last quarter that really got the stock off to the races last time around. That hasn't been the case this time because it looks like there's just so many I suppose, mixed metrics within this, also with some of the charges that perhaps you're talking about that might be weighing on things as well, Marley.
Yeah, and we are getting some commentary from management here saying demand is strong for AI, for chips, for robotics, for its existing offerings. They are, disclosing those impairment charges that they had there and the asset impairments. KG, what do you think the questions are going to be here on the call? Charlie O'Shea highlighting to us that in his 2 decades covering Amazon, that they are particularly opaque in terms of details, not transparent. It's not going to be like yesterday's call where we get very specific breakdowns and percentages of what this money is being spent on. What are you expecting the questions to be, and how forthcoming will the answers be?
I don't know it's going to be, forthcoming. The problem that Amazon is going to have, especially on this conference call here, is their commentary that demand is strong is all well and good, but when you kind of look at the numbers, it kind of doesn't reflect that you're getting this outsized pace of growth compared to the street's expectations. That's when you know that demand is strong, when you are actually able to exceed the guidance or the street's expectation when it comes to guidance moving forward. Also, when you're looking at margin expansion, which once again, their guidance right now doesn't really reflect that. And in fact, if you're looking at a lot of those metrics when it comes to operating margin for each of these business segments, there's nothing that really kind of shows outsized growth or in profitability. So I think they're going to have a pretty tough time in order to kind of explain this. I mean, outside of a partnership that they announce or maybe a new type of strategy that they roll out on this conference call here, I think this is actually a bad report. And unfortunately, it was already hinging in this channel line for the last 6 months or so, and now it just actually broke that neckline. It looks like it's going to go test some gaps to the downside here. So not a great report. I think it's going to be a really tough one for this conference call.
And final thoughts, KG, any numbers, new numbers coming across? They're giving more commentary about their demand. But as you've said, the numbers don't necessarily indicate that demand is that strong.
Yeah, no, I would agree. I mean, if you're kind of looking at the consumer side of their business, I think it did actually perform relatively well, especially on the international front. You are seeing margins actually expand more than the street's expectations there, but international sales is really not a big driver when it comes to top line growth. So it's kind of like comparing it to Tesla's energy business. It's really doing great, but at the end of the day, it's not a big mover when it comes to revenue growth. I think AWS is going to be obviously the focal point of this conference call, and then regarding cost for these data centers and their build out, how are they managing that, knowing that we have the memory chip crisis, if you will, that's having an impact when it comes to prices for a lot of these input goods. So they have a very, very high bar in order for them to try to reverse the stock. And unfortunately, I think this is a trend that we are seeing. I think the last one that we have is NVIDIA. Let's see if they're going to be able to kind of surprise us. But at the end of the day, NVIDIA hasn't really done that great after earnings either. So I don't think this is a good report at all.
Well, KG, we appreciate you being with us to walk through all of these numbers for Amazon. We are seeing Amazon move down about 8.25% right now on the heels of this report. That's Kevin Green. On close, I'm Marley. Caden Sambatis joining us in New York, and George Tillis is back with us to take a look at the earnings for Reddit right now. You can see on the chart moving higher. We're up more than 5% on a beat on the top and the bottom line. Fourth quarter revenue coming in at $726 million. That well exceeding expectations for about $666 million, 70% year over year growth there. As far as their EPS, also beating on EPS, their EPS coming in at $1.24. Expectations were for 95 to 96 cents, so a considerable beat there as well. Net income for the fourth quarter reached $251.6 million. That also surpassed estimates for $193.6 million. EBITDA at $327 million, even beating estimates for $286.1. And daily active users reached 121.4 million, which was also slightly above estimates for 120.15 million. As far as their outlook, they're projecting Q1 revenue revenue of 595 to 605 million. That expected and blew past the expectations for 577.3, well below the range they even offered. And Q1 EBITDA expected to be between 210 and 220 million. Estimates were calling for 203. So again, estimates well below the range. They also authorized a $1 billion share buyback program as well. So a big move to the upside here. We're moving up about 6% for Reddit, factoring in a 13% move either way, though potentially on earnings. Want to bring George and Sam into the conversation. George, we were talking about Reddit and the potential expectations here on Trading 360 today. How is it stacking up in your opinion? And are you surprised we're not seeing more of a move to the upside on these numbers?
I'm actually not surprised to see more of a move because, again, you have to consider the context of the market we're in contextually. So that's been putting pressure on Reddit. And we talked about this earlier with the stock roughly down around 40% just in the last month. So, again, the software services, communication services, names have been sold off, high beta names. And that's what Reddit is. But the thing about the business is just look at the numbers themselves. $1.24, up over 240% in EPS because last quarter, last year, 36 cents was the number. And then, of course, the sales also bested the estimates, up 70%. 725 versus last year's 427 million in terms of sales. So they're essentially, moving the needle when it comes to EPS and sales. EPS is growing 3 times sales, but the stock really has not reflected that. In fact, over the last year and 52 weeks, absent the after hours move up about $7 or so, the stock is down 31%. And it's really a function of what's going on with the market, especially these high beta names like Reddit. But nonetheless, a lot of times you see companies report really good earnings and a bad tape. I think we're in the middle of that right now when it comes to the name itself. And the other thing is they don't report their monthly active users, but going back to last quarter, it was around 116 million daily active users. And he reported, if I'm not mistaken, we're over 124 million this quarter. So that's a pretty significant increase just sequentially quarter over quarter on a daily active user basis.
And Sam, George just highlighted an important metric here, that daily active users up 19% year over year, that coming in at 121.4. So still a strong improvement there, but also the importance of ads. I know you've talked about Reddit today, and even with Amazon, their ad revenue is so important for a company like this to show they're getting the clicks, they're getting the eyes on. 75% increase year over year to 690 million. Other revenue increased 8% year over year. What's really standing out to you here for Reddit?
I think those two things, Marley, because those go hand in hand as well, because they do generate more ad dollars from people opening those accounts as well. So just how many people are using Reddit has been a really major focus. So you and George are right to obviously focus and hone in on that with that increase there, because that is coming in the face of a lot of competition, obviously, from some of these other platforms. For example, the Google AI review, which summarizes those search questions. So a lot of users also have come over from Google. So that's really been interesting. But they've been trying to get more people very much to their app and trying to retain those users as well. I think retention has also been really key for them. They also make a lot of revenue, or some revenue, I should say, from the data licensing business. Google and OpenAI are some of their partners here, so I'm not sure what you're seeing on that. But I mean, as far as some of the C-suite commentary, I've actually seen the CEO, Steve Huffman, actually talking to CNBC, and he's been talking about the macro shift towards AI and how they're talking about how this is the most human place on the internet, and that's perhaps why they saw the results that they're seeing. That perhaps explains some of the active users. But they've been doing something really interesting here as well with the Intercontinental Exchange, partnering with Reddit as a tool for investors. They want to tap into those deep conversations that are happening online to help investors form some of their decisions. And so we have actually seen them coming out with some of those examples, for instance, how they were able to see moves, for instance, in FX before they became more obvious in the market, just from sort of, I guess, seeing those conversations playing out online, and then obviously investors making decisions based on that. So I think that's a really interesting partnership as well.
Certainly, and Reddit, being rewarded, as George said, a bit beaten down coming into this report, down more than 30% just this year. But George, final thoughts here. Seeing this 5% move to the upside on Reddit, they've disclosed some good numbers. They've got their share buyback program, another strong point here, and they're projecting strong ad sales going forward.
That's the thing. There's one caveat I need to mention here, and I suggest this may be one of the reasons why we're seeing a reevaluation of the name, because OpenAI and the publication of Reddit on their platform has actually been very lucrative in terms of the data licensing that Sam brought up. That might be, again, some of the challenges going forward, especially with OpenAI now moving towards an advertising-based model. So that actually might be encroaching on Reddit's take of the advertising revenue that they've been generating through OpenAI. So that may be one of the challenges that Reddit is facing, or at the very least, what the market is interpreting as a challenge. Irrespective of that, if you look at just the numbers themselves, they are remarkable, but the stock isn't reflecting that. So there's something else going on. I suggest it could be some relationship strain between OpenAI as well as Reddit, but that could change certainly if, again, Google starts using Gemini searches or referencing Gemini searches using Reddit's technologies going forward.
Yes, certainly possible, and likely will come up on the call, their call taking place here in about 12 minutes. So we'll have answers on that shortly. But I do want to move over to Fortinet. We're also getting their earnings as well, seeing Fortinet up about 10% on this one. Another beat here. We've got Q4 EPS coming in at 81 cents, beating the estimates by almost 10%. They were calling for about 74 cents. They saw their revenue hit $1.905 billion. That also bested expectations for 1.86. It does mark about 15% year-over-year growth. Product revenue growing about 20% to $691 million. As far as their billings, totaled out at $2.37 billion. That also surpassed estimates for $2.24 billion. They're forecasting for their first quarter of 26 revenue of $1.7 to $1.76 billion. Estimates were calling for $1.72, so just almost about the midpoint. They're slightly below the midpoint for their EPS guidance, 59 to 63 cents. That does fall below the estimates, looking for 65, so below the range. Full year 2026 revenue guidance, 750 to 7.7 billion. That does align with the estimates, and their EPS guidance, $2.94 to $3, also matching estimates, which we're calling for $2.94, so just slightly better there. As we're taking a look, though, George, seeing this move to the upside for Fortinet of about 9% right now. What are some of your takeaways here?
Well, it makes sense. The move at the after hours, considering the numbers that were published by the company, at the end of the day, looking at the top line sales, 15%, billings growth exceeded that by about 3% or 300 basis points. That gives you an idea that the company demonstrates a better refresh cycle on their hardware as well as potentially services from a cybersecurity standpoint. I think one of the important factors with Fortinet relative to maybe some of the other competitors out there, which include, of course, companies like Okta and CrowdStrike, is this company is very well versed in proprietary technologies associated with application-specific technology chips, the types of chips that Broadcom and Marvell sell in the marketplace. So that seems to be more proprietary to Fortinet, plus its government business is still quite robust. So this is a quarter where they're demonstrating operational efficiencies, and of course, moving the numbers, at least on an EPS front, from for 2026, slightly higher versus the midpoint. The midpoint, I think, was not $2.94. Now they moved that higher end target to $3 per share.
Yeah, it's certainly a strong report, being rewarded for that. They are up 9%. Also want to walk back through the other. We covered Reddit, now up about 5.5%, 6%, right as I was saying that, and Amazon trading down about 8% lower. George, thank you for being with us to break down those earnings.